Everyone, I'm Jen Riggins. You know me, I host the IR Global podcast, and today I'm with Tom Pastore, and we are talking about family law, kind of the opposite of family law, the awkward stuff where you actually need lawyers and expert witnesses involved when things start to dissolve and get divorced. So, as that is the way of life, we're here today to provide some context for how these expert witnesses like Tom work in there and help hopefully make that process a bit easier. We think this is something that hopefully can help those listening. And I want to let Tom go ahead and introduce himself, please.
Oh, thank you, Jen. Great to be here today, and thanks for inviting me. So I'm Tom Pastore. I'm one of the co-founders and CEO of Sanli Pastore Hill. We're a financial advisory, forensic accounting, and business valuation firm. And one of our key specialties for the past 33 years has been providing forensic accounting and business valuation services in marital dissolutions, i.e. divorce.
And in this situation, we're not talking that like a couple owns a business together. It's more, I think we all think of Bezos, and I should remember her name, his first wife's name, that I should know. She's donating all her money, so we should respect her more. But are we talking about a situation where both parties are owners, or it's more of a didn't have a prenup situation?
Yeah, it can take myriad forms. The main ones we see, and I do, by the way, my territory for doing these services is the United States, but with IR Global, I'm the exclusive forensic and valuation provider in the state of Illinois since I manage our Chicago office. I wanted to say that. Well, you know what? Some states have community property laws where the assets are split right down the middle. Whatever the fair value of the assets are, business, real estate, jewelry, art, total up, split it right in the middle. Other states have equitable distribution where you will be doing a split, but it's not always even. It's based upon the respective husband and wife or respective spouse's contribution to bringing those assets to the community. So in many states that have community property, whoever the spouse is that owns the business, it's deemed to be half owned by the other spouse. So there can be completely a situation where one spouse has no ownership interest, but they do for family law purposes. In other equitable distribution states, the business still has to be valued, but it depends who's created more value in it. And oftentimes that spouse that owns the business might get 100% of that value, or maybe 70% of that value.
Okay. And then for those who is interested in listening to this, who would be want to listen to this podcast today?
Well, I think it would be absolutely family law lawyers, marital dissolution lawyers, divorce lawyers. That there's several different terms. They'd be interested in listening to this, but often estate and probate attorneys encounter a situation where now a couple that was their client is getting divorced, and they would be in a position to perhaps say, all right, we need to get an expert, and they deal with valuation and forensic people all the time. So that would be also someone that would be interested in our services. And then there are shareholder divorce attorneys where related parties that own a business just can't get along, and they need to buy one or the other out. So the same things that we're going to talk about, the stuff that I do and my firm does, applies to shareholder divorces as well as family divorces.
Okay, yeah, I was going to ask that because I know we can have both, and both can be heart-wrenching because while businesses are not actual children, they can be like children at times. But so let's set the stage of what goes into this business valuation and forensic accounting. When do you usually come in? When are you called to the stand, or hopefully to a mitigation less stressful location?
Sure. It's usually pretty much right at the beginning of the proceedings because, family law and shareholder divorces for that matter are of a more narrow focus than commercial litigation. I mean, it's the splitting up of assets. That's the end game. It's splitting up of income too. Whereas, as you know, commercial litigation may involve many different buckets of damages, totally unrelated to each other, and the outcome is far from certain until the jury or the judge makes a decision.
Okay, okay. And then you were talking about equitable versus community. Because Illinois is one of your main areas, which one is Illinois?
Equitable distribution.
Okay. Does that make it more interesting as a forensic accountant then?
You know what? You do have to do that added analysis, right? To say who's contributed more to each specific asset. So it can be very, very interesting. But most family law situations that we're involved in consist of one or more businesses of significant size and other assets in the estate. So most of them are very interesting.
Okay, yeah, I can imagine. So then how do you get to this? So you've got a divorce, unfortunate, but a reality. And then you need to value a business. How do you then value a business? And often, I don't know if all sides are aware of the value of the business in this situation, right?
Oh, sure, sure. So the process of business valuation is really 5 steps. One, analyze the company's operations, its intellectual property, its management capabilities and whatnot, its trade name, its employee workforce, things like that. Then analyze the company's financial statements for historically for about last 5 to 7 years, and any projections or budgets going forward. Then you have to analyze industry conditions, and that subset would involve the level of competition in the industry, any consumer trends, and disruptive technologies that might totally put this industry out of business.
Mhm.
Then the fourth is economic analysis, and whatever macroeconomic factors uh, affect the business, you'll look at that. Is it employment levels? Is it inflation? Is it consumer confidence, just to give a few examples. And then finally, take all those ingredients and you select the valuation methodologies to employ to come up with the value of the business.
Are you typically hired as a third party, or are you typically hired to represent one interest and then someone else in a similar role would be hired to interpret that in a different way?
Well, both those circumstances actually do occur. Most times it is where one of the experts for one side,
Mm.
okay? But occasionally the parties stipulate, and maybe it's in their prenup, for instance, that in the event we get divorced, we're going to go to mediation. And if and we will hire one appraiser to
Mm.
initially give us the value. And those are the circumstances where we're solely hired by each of the parties. That happens in shareholder divorces too, by the way.
Okay. Okay. So we've talked about this due diligence process. Now, what are the different ways you can value things, especially in such a time when valuation of companies seems, at least in the tech industry where I work, wildly off the reality, but also there's this disruption of AI and there's this market uncertainty right now. So how are the different methods you go about valuating, if that's a word?
Yeah, well, and of course, there is some judicial preference depending on the state you're in, but in general, there are 3 approaches to valuation. The income approach, where you just take income divided or cash flow divided by a present value by a rate of return to get the value. Then there's the market approach where you say, all right, I'm going to look at sales of similar businesses in the industry, and they usually trade at some multiple of earnings or revenue. And I'll look at those similar businesses because they're private transactions that are actually reported in several databases. And of course, they may have public company competitors. So you'd use that market approach. And then third, and very rare, is the asset valuation approach. And that's basically where you tabulate the fair value of each of the assets. So the business's machinery and equipment, real estate, if it owns that. And then it was like tangible inventory, obviously, accounts receivable. It's like kind of counting process, but then you have to add the value of any intellectual property, like patents, trademarks, trade secrets, and things like that.
How long does this process usually take? That sounds like a lot of information to gather.
Well, ideally, in the world of not litigation, like compliance valuations for estate and gift tax purposes, merger and acquisition fairness opinions, which we do also, it can take, because you get all the information in the data room, you request it and whatever, and people have a timetable. It's, fairly quick. It can take 4 to 8 weeks. Now, going into the family law world, those matters can stretch on for years. I've got 3 matters right now that have been around for 3 years. Okay. And it's the back and forth. It's the way the courts work and whatnot. And so, and it's the way, one party may be hesitant to share information, believe it or not, in litigation, but it happens. And so you have to go through arduous discovery, or the attorneys have to do that. We can help with our request for information, but they're in charge of the case, obviously. So, the timetable is typically extended beyond the typical timetable for a compliance valuation in the state and gift taxes.
Okay, and when we're talking about this idea of shareholder divorce versus marital divorce, it feels different because a shareholder divorce, there is an actual sale or transfer of assets of the company. But in a marital divorce, you're not usually selling the company or a portion of the company. So is this translated to a transfer of shares? Is this translated to a timetable of payout over, I don't know, alimony or things like that? How does that work?
Yes, those are two common mechanisms, because, or, or they could be horse trading involved, right? So it's kind of, especially in community property states. Okay, all right. Let's say the wife owns the business. The husband says, all right, look, I'll take the real estate and, some of this fine art that we have, because when I tabby that up, it's like the value of your business. You keep the business, I'll keep these. There's an example.
Okay. Okay. And so one of the topics we discussed talking about is the idea of forensic accountant. And forensic to me, maybe I've watched too much CSI, but you need to do some digging, I guess, in this situation. So can you kind of get into how forensic accounting is the foundation of reliable valuation? How do you go about that process?
Oh, certainly. So, yeah, it does involve a lot of digging and analysis, and it's all about the underlying records, at least initially. So, you may have financial statements, but it's in a privately held business that doesn't get audited. Okay. So, what you want to do is, okay, let's look at, first of all, from an overall standpoint, let's track the revenues the business is reporting on a monthly basis for the last 3 years, as an example. And let's look at the bank statements, because, overall, the deposits received should be equal to the revenues, unless you get a loan, but you put that aside. So, all right, non-loan stuff. So if it doesn't, then there's a divergence, right? Because this is the actual cash coming in. All right. So that's one of the things. And then what you want to do is dig further down. Okay, these are the expenses that are being reported. Let's see the supporting invoices for those to see if they match up and whatnot. And then finally, it's many times those things pair up well and whatnot. If they don't, we have to make adjustments. And so we'll look at that. All of a sudden, we find a bank statement, let's say that's owned by one of the spouse that owns the business, and they got a personal bank statement never known by the other spouse. And they're receiving income in that statement. All of a sudden, oh, there's an add back to revenues we have to make, you know. And so those are kind of the major things when we're kind of looking for accuracy. Then the second thing, and very important, is, well, what are the perquisites and non-business expenses being put through the company's costs? Okay. especially with privately held businesses, because they're run more for tax purposes, and so their goal is to get income, as low as possible. But we have to look at the true profitability of the business. So we have to add back those perks, prerequisites, and whatnot. So, those could be tickets to Major League Football games, can be
Ooh,
car, leases for like Ferraris and stuff, which aren't needed to run this business. There's many other, or they can have family members on the payroll that don't work at all, things like that.
okay,
Yes.
yeah, so you have to do all that, and then I assume you then have to share with both parties what you've found and report on it. Does that end it? Is there then dispute over it? How do this reporting and presenting findings work?
Yeah, that'd be a yes and a yes, actually. So sometimes it is ended, Sometimes the experts on the other side were within 80, if they're within 80% of if we're within 80% of each other, the judge is going to cram a mediation, a settlement down their throats because we're too close, right? At that point, split it in the middle and whatnot. Other times, you know, we're not as close in valuation and whatnot. And, it may go through a few mediation rounds. It may go through both of us experts getting deposed. It may settle after that, or it may go to trial.
Okay, and then what happens then? Like how long, so these 3-year cases, these 3 cases you're working with, are they going to trial then? Or we're not even there yet?
No, there is a trial coming up on one of them, and then an arbitration on another, and a mediation on another. Okay. So,
Okay.
yeah.
And throughout that process, are you just towards the end? I know you said you're brought in at the beginning. How does the communication work? Because you are not a family or shareholder lawyer. A lot of IR Global is, so I'm sure that makes sense. You're part of it. Um, how does your relationship with these law firms work? How does, and with the end client?
Yeah. Well, the key to that is because these are, in many cases, drawn out
Hmm.
many months or years. I think you have to have frequent meetings with all the parties, the forensic accountant, the business valuation person. They may be the same person, okay? The client, the lawyer, um, mainly should be meeting because that's what I focus on. Now, if there's psychological issues, there may be other things where they use experts. We usually don't involve in that, right? Or child support, things like that, abuse, whatever. We're not involved in that part. But frequent meetings are often good, monthly, quarterly, usually. And we report our findings or the latest information we are getting and have analyzed, or the information we definitely need that we haven't got, but we need it.
Okay, and typically are you brought on like your first time working, or do you have long-term relationships with law firm as you've been an existing entity for a while now?
Yeah, we have long-term relationships with law firms, definitely, but also with the individual practitioners too and whatnot, because obviously the attorneys retire over time, experts do too. And so we always like to get the next generation involved. We'll do MCLE seminars, continuing legal education and whatnot, that, and attend family law bar association meetings. And IR Global, obviously, is always bringing in the best of the best talent, the newer lawyers too, and whatnot. And so we always like that forum that we can get on a Zoom with anyone at any time. We appreciate that.
Okay. And then, well, we've kind of touched on Illinois, but your practice does span the 50 states. And is there a varying, like, are there trends? How does it work anyway when you decide the state? Is it the state the business is registered in? Is it the state that the couple lives in if they move because they're getting a divorce and they are separated? Does that change the states of the jurisdiction? What do we need to know about all that?
Okay, I'll give you the answer from a valuation and forensics perspective
Of
because I'm
course.
not an attorney. I'm not a family law attorney. I'm an expert for many of them. So it's been my experience, for instance, and both in California and Illinois, it's the state that they live in,
Mm.
um, that you would do the valuation. Now, the complication may be there's other owners that live out of state and whatnot. So there would be a very good future IO Global presentation, in my humble opinion, if we could get a family lawyer involved with, because that's a great question you just had. I'm sure there's all these different exceptions.
And that's decided before you're brought on, usually, I guess. So you,
Sometimes right in the middle, you have these things that go on and whatnot, and um, and all of a sudden, like the family lawyer is handling it, but then all of a sudden, of course, the non-divorcing shareholder, not related to the family at all, it's domiciled, let's say in Cayman Islands, for instance. Say, hey, what's going on here? Wait a minute, we want Cayman Islands law or whatever.
to be fair, I did just interview, I've interviewed Kyle Broadhurst a couple times for the podcast, who is based
Okay.
in Cayman Islands, as are many businesses, but I believe he said there's only 20,000 people. So that would complicate things as well that are on the island.
Wow.
Mm.
Yep.
So do all attorneys, do all family law firms rely on your style of expertise, or do they try to go it on their own? What is the value of hiring a forensic accountant?
Well, I think, divorce has been taking place so long in the United States, right? And many of them are bench trials without juries and whatnot. So let's say, for instance, moving to California for a second, this thing called the Master, which calculates spousal support, whatever, but also accumulates all the assets. So from day one, the judge is like, okay, have you been filling this in and whatnot? And many other states have that. So it's just a matter of, what we know what the end game is, right? It's the allocation of assets to both spouses, divorcing spouses. So everybody, most states have that equivalent kind of calculator and whatnot. Um, so it's first thing on their mind. No family law judge is going to be surprised about a forensic or a business valuation person coming in, but they certainly are going to say, look, unless one of you spouses or both have valuation and forensic experience, if you go out by it on your own, you run the peril of an uncertain outcome or an outcome that one of you really isn't going to like, and maybe both of you aren't going to like.
Which may happen anyway, but you want to cover all your ducks in the row so you get a more fair, efficient, hopefully less contentious resolution.
Yeah, and when we think about it, especially in IR Global with these members, they're all very good attorneys and whatnot, and they don't want a malpractice lawsuit, which might occur if you don't hire an expert. Uh, you may run afoul of certain things.
Absolutely. Is there anything else our listeners should know, or anything you want to share? It sounds like we've covered Illinois and California. I don't know if there's other interesting state stories you want to warn about, because interesting in law is not usually a positive thing.
Yeah, I would just say that whatever you want to do, make sure it's probably a path towards more success, which is never guaranteed, of course, in litigation, but path more towards success to hire experienced business valuation and forensic accountants. That's
Absolutely. I guess it makes everything more transparent. And if you have this clear communication and are working with them or with you, like it's an asset, a benefit, everything just runs more smoothly.
yeah, I agree, definitely.
Okay. And if people are looking for a forensic accountant, whether we're talking shareholder or marital divorce, what's the best way for them to get in touch with you?
Well, I would go to the IR Global website because that will connect to my firm's website, which will connect to my email. Yeah.
There you go. Up. Some people still check their emails.
You know
Uh,
what? You can always Google Thomas Pastore business valuation too.
oh, maybe I'll find some good tips and dig deeper on from this call. Thank you so much, Tom. And thank you to our listeners. If you know someone that would benefit from this, please do share it with them. And I hope you all have a great day and good luck, especially if you're going through a divorce or helping people have better divorces.
Thank you very much, Jen. It was a pleasure talking with you.
Awesome.